being a female in such a male-dominated industry. Because of the lack of the female trader, maybe it was much harder for them to see themselves doing it.
Studies show that women are really good with trading because we're very systematic. I've taught men before who were like, I've won 20, 30 accounts.
Welcome everyone back to the Words of Rizdom Podcast. We are back once again for our final episode here in Dubai on our tour, if you will. We're joined by the one, the only, Elyse.
Yes, thank you for having me.
No, it's my pleasure. It's my pleasure. I know you had a very long journey, so
Yes.
appreciate you, jumping straight into the podcast straight away. I know it's not easy. And well, let's go straight into the journey, right? I know there's going to be a lot of people out there who know you. There will be those who don't.
Right.
So we'll just get them up to date. So if you want to tell us how you got to where you are today, be as long or brief as you want, and then we'll take it from there.
Sure. I started in July 2017, very specifically. I did start in MLM like most people did, but it was a great introduction for me, and I don't like to sound bitter and resentful like some people do, because I felt grateful for the opportunity to be exposed to it, kind of full immersion. But that was in July 2017. I had a friend that was doing it, the usual, bring someone in. But that worked in my favor because I was already looking to trade or invest. I didn't even know how to get into it. So I was actually thankful, once I saw it, I'm like, okay, I want to do this and learn this. So this is perfect. So I jumped in, 10 feet down, went ahead and just fully immersed. I was obsessed from day one. For me, I always say with trading, it was about seeing the possibilities, right? So even though I only started with $300, when I was able to, make a few dollars and by doing a trade, in the beginning, people make fun of you. They're like, oh, okay, well, you're going to be rich. And it's like, okay, for me, I just knew the possibility. If I can turn this to this, then I can do this. I knew all it took was time and scaling, right? So yeah, I was obsessed from day one. I was still working then. At McKesson, pharmaceutical distribution. I was a single mom. I started learning when I just had a newborn. July. I had her in March and then started learning in July. So she was a few months old. I was doing work full-time, school full-time, and doing that. So but that's also why I got into trading, because I was tired of living paycheck to paycheck. I had a good job, but still, it's like you have a second job to pay for childcare for your first job. It's just something's got to give. But that was why I got into trading. I just wanted to be able to do more for myself and for my family. So I did that for a period of time. I always joke about going through all the education, but basically I saw that there was more out there, and I had already done all this, and so I wanted to take it elsewhere. So I left that, and I just started reading books, mentors, a little bit of everything with that. I guess I should mention I traded up that money. Obviously it fluctuated a lot. I'm a new trader. You're not as consistent yet. So although I was compounding it, it's not like it just went like this, right? It was a lot of fluctuations. But I continued to work for that whole entire year, and I never took a withdrawal, and I just continued to build on that, right? Well, I did practice one withdrawal to make sure they would withdraw, but that was just a try one. Yeah. But I compounded that, basically saved up a year-long salary while I was continuing to work, and then I ended up giving my notice, I think a week short of a year being there, and to do trading full-time. And I've been doing it ever since. So I guess that was 2018 was when I started to do that. From there, I did PAMM accounts. So I only did PAMM, personal account management. I think everybody knows what it is, but I don't want to assume.
Just in case, yeah.
Right. So I did a PAMM account. I was brought on to do that. It was a good experience. Everything has its pros and cons, from personal to PAMM to funded. But I enjoyed that experience. And then I moved on to prop firms. So Funding Talent was the one that I did originally. You might know better the time than me. I don't remember anymore. Kind of like the 6 year kind of just moves together. But whenever Funding Talent was around, I was there. I did that for about half a year. I was actually lucky on the last withdrawal that I had taken it right before, the end of that. Yeah. And then eventually I was able to get into working for private investors or a fund. And I've been lucky with that I've always been referred in by somebody to be able to do that. So So yeah, that's that long journey, I guess, of kind of
down,
that's 6 years into like a few minutes.
Definitely. So like in terms of the let's start with like your starting capital, $300. Obviously compounded that up over time, as you said. What did that look like in terms of that journey? Like the $300.
It was emotional, right? I'll tell you that much. I'll tell you what actually helped me was because at work we weren't allowed to have our phones. So I wasn't allowed to have my phone for 2 hours at a time. I could only check it during the breaks. So that actually helped me early on to be able to hold trades or to be able to manage trades, either like learn pinning orders, like limits, stop orders, or having like letting the trades run. So it taught me those two things early on that I felt like if I had my phone on me the whole time and I was like obsessing over it, I would have started with really bad habits. So with that, I actually had like $1,000 or $2,000 to invest. But they always tell you start with what you're willing to lose. And for me, I guess it was $300. So I told myself that once I built it to 1,000, that I would put in the other 1,000 and grow from there. So even though I did technically start with the 300, I did start with like, 2,000 or 3,000 and built from there. But I just took my time with it. I continued to compound it. I used my regular paycheck for my bills and everything, and I continued to compound it. I'm not going to lie, that was a very hard thing to do, only because, it's tempting to, I've made this much and take it out and do all this stuff. But I didn't, because I knew that for me to reach the goals that I needed to do is that I needed this amount so that I could actually give myself the chance to do full time. And I do like people that are able to bet on themselves and, I'm going to go full time and do it. For me, I had to have that safety cushion, right? I'm a single mom, so I can't just, if it was just me, I probably would have left earlier, if I'm being forthright with you. But since I wasn't, I had to take time to compound that. But there was definitely fluctuations in it. Consistency at that time was not there yet. I did learn risk early on because you eventually get tired of having those losses that, you do a lot of really good gains. And then it's like, you don't want to be doing it backwards, right? The whole 2 steps forward, 3 steps back. That's not it, right? So quickly I learned that I had to be better with risk because it's like, it was just wasted time. It's just not efficient. And eventually that's the way I looked at it.
Definitely. So like, where did you take that account, that specific account? Where did
it so my salary at that time, I don't remember the exact number. Like my salary, the salary, not what I did, but the salary was somewhere around like 60 something K. So basically once I reached 65K was when I was like, okay, I've saved up my salary. I have that. And then I'm gonna start there. And my thing was like, even, my bills, the first thing I really did was really just pay off like most of my debt that I had. Not the student loans. I was like, those can just stay. But everything else, I was like, I just want to be able to focus on this and take away the stressors. So that was the first thing I did, was paid off any debt that I felt like was going to catch up to me, especially high interest principal type of things. Of course. Get that taken care of.
And then I have this cushion before trading.
Yeah, just life, when you have put a lot of stuff on credit cards and stuff like that. I'm really good with that now, but at the time,
everyone has to.
I wasn't crazy with it, but as when you need something and you're a parent, you're gonna put on the card, whatever. Yeah.
And then, so obviously from there, you said you went into PAMM. How did that come about?
The only reason I got into PAMM was because I was asked to do PAMM with somebody, and I didn't know at the time that I probably should have said no, because it's technically their PAMM account. It's supposed to only be one trader. But they basically told me, I'm trading an account. I have these investors. If you help me with it, we'll split our profits, half and half. I didn't realize that he wanted me on the account to be profitable and so he could make money. So I ended up leaving that as a period of time because I was actually being profitable and the losses that he was making was taking away from my wins. So then, so then I was like, well, I could just do this by myself. I don't need to do it with. But I'm still thankful for that because it gave me the introduction to it.
Was that your first time?
I didn't know anything about either
someone's capital.
Yeah, I didn't know anything about PAMMs or MAMs at the time, and so a lot of times PAMs are always offered through brokers. So even though technically when you're trading investor funds, you typically want to be licensed as well. But typically, MAM and PAMM accounts done through brokers, they're the ones licensed. And people are aware with that, what they're doing, right? It's not like, it's a little bit different, but people understand what they are. Understand how that works.
Exactly. And obviously, what was that like? Obviously, as you said, there was two of you. So then,
yes,
whilst you were winning,
yeah, that was short-lived. It was a good introduction, but it was only a short period of time.
Yeah. Well, what was the setup like? Kind of like in terms of, was it kind of like a sort of a standard deal, if you will, or was it in regards to like profit split with investors
right.
and stuff?
So profit splits on PAMM, they are set by the trader.
Okay.
And sometimes certain brokers will have a max amount, like 30%, but the typical will be like 10, 20, 25.
Mm-hmm.
But obviously the higher number you get, the less you might have invest, because people might not want to give up that much. So if you have a higher number, you're going to want to produce better than anybody else.
Mm-hmm.
So, but yeah, and you can also have public or private PAMMs. So the original one that I did was public, but when I did one of my own, I actually did private, which is invitation only, meaning like you would have one or two people that you know. Most brokers will have a minimum investment for PAMMs, and then obviously you can also set your own. So most of them would be like $5,000 for an investor. You can set it higher if you desire to. So that's what I did. I did private, invite only, and did private on my own. And I actually did that. The public one I did was a FX Choice, and then the private one I did at LQDFX.
Okay, and the public one, the first one you did, how much capital was that?
It was only like 5 figures. I think it started somewhere around like 2030, and when we ended, it was probably like 50K. I'm not really sure. It was a short period of time, but it wasn't like a crazy number. It wasn't 6 figures at this. Yeah, my transition into capital was always, like 5 figures, 6 figures. It was a gradual thing, right? A lot of people talk about, trying to skip steps. And technically you can, like, prop firm is a little bit of a cheat code for that. If you only start with a few hundred and you're going to 6 figures, but you also need to be ready for it. So I will say that because the way that I did it, where everything transitioned like at a time, that it did help me better prepare for it, because I was used to seeing those numbers in capital. So I was only, upgrading little by little so that it was more comfortable that way.
Because like, as you said, it's like a cheat code, but then also it's kind of like, because of that cheat code, as you said,
you might not be ready. Yeah.
And therefore they just go round in circles.
Yeah. Yeah. Because mentally you have to be able to deal with those type of numbers. And so,
and then, so as you said, you went private then. So private wise, what was the capital like there?
My investors, I only had them do 10,000, and then I only had about 3. So I still stepped with like similar numbers to what I was used to. And then I did that for that period of time. And I didn't really do 6 figures more so until I was doing prop firms.
Okay.
Excuse me. So that was when I started doing more 6 figures. Okay. But I think I was more comfortable with that because the numbers feel different. Okay, so I went from trading my own capital to trading others' capitals, but it's still different when it's someone you know versus, demo stimulated money. So these are both the same numbers, but different feelings around it, right? Because I know these people, they know me, and I've spent my money, and when I take a loss here, no one knows but me. When I take a loss here, they know, and I got to report to people. So the feelings are different around that same capital.
In terms of like PAMMs, do you have to have like a track record?
It depends on the broker. Some of them will just let people apply. Not that many, but most of the ones that I've seen, you do have to have some type of track record. And that track record is usually about like 6 months. What was it that I was looking at recently? I think Sway Markets, they do have a vetting process. So some of them will either just have, I think for theirs, you have to have 6 months of track record minimum. And then they still have you do like you start with a certain amount of capital and you do that for a month before they let you go public. Okay. So they basically see that
test you out.
Yeah, they test your record to match your track record.
Oh, okay.
Which I think is great.
Yeah, no, that sounds good as well.
Yeah.
And so obviously prop firms allowed you to go onto the 6-figure stage.
Yes.
And then how did we transition to 7-figure stage?
Yes. So with prop firms, I was much more systematic by then. I had gotten better with risk as I continued with different accounts. I had gotten better and better with it. But prop firms kind of force it because if you don't, you violate, right? So, and also with your strategy, as your strategy improves, even if you're taking the same trades, you trade them better. So it's like, what I tell people is like, I might be taking the same trades as before, but when I took it before, it was like a 1 or 2 because, I didn't know what I was doing and I'd leave a lot of room. But when you get better at fine-tuning your entries, I might actually take the same trade, but it may be 1 to 6 just because my entry's better. And I'm getting in at like better timing. Maybe my timing's better. Yeah. I'm getting in with like liquidity or something like that.
Just like the buildup of experience.
Yeah, the experience allows you to take better trades and whatnot. I'm sorry, I lost where I was going with that.
I was saying you're going to the 7-figure stage.
Yes. Okay. So, right. So trading with funds are, I was basically brought in, I was referred every single time. So although, actually, I'm kind of glad we're kind of getting into talking about social trading. Social trading is very interesting, right, when you're in groups and things like that, because it can be sort of a double-edged sword because, you learn with people and y'all support one another, but then also sometimes it can cripple you. Like if you, trading is a very private journey, right, or very individualized. So then sometimes it becomes a crutch to people. But with that said, I try to use it properly and with people that, was at a higher level. So my circles, like the groups that I was in was large and they become smaller, right? Because then as you go along in your journey, you see like the stats that are there with trading in terms of people falling off. You see that in your journey. Once you've been in it for years, you see it like people dropping off or not taking it seriously or taking breaks. So I was in a really small knit group. One of the people there worked for a venture capitalist firm and he had connections on LinkedIn. So, they were looking for female traders for a fund, and he referred me to them. He basically said, "You're the only trader that I feel like could do this or handle this, and I think it's a great opportunity. You should do it." So I did. I did not yet have. I had track record from the prop firms, right? But the problem with that is that with tracking, you typically have to have the investor password, and they don't do that a lot with those accounts. So you're sending them literally month by month, right? Because they reset it each month too. So you can send them actual track record, but I just want like the data point and tracking that you typically do on like a personal account. So although I sent them like 3 to 4 things, it's like they're all separate things. So I still had to do an actual audition with them, and typically you want to have your own track record, but they took. Like I was good enough to get the audition, but I had to do the full audition. So that was how that worked.
So what would like the audition look like?
Auditions can always be different in terms of whether you trade their capital or demo or live funds. For the first one I did, I actually traded my own funds, and you had to do track record with that. I did that for 3 months. They had it in phases. So they had like 3 months, and if you pass that, then you go to the second part where they do fund you a small amount, and then you start making some money off of that. And then the third one is basically the full funding and the contracts and everything. That was how they did it.
No, sounds good. Sounds good. And it makes sense as well, especially if you sort of had the track record in the form of the prop firms and back it up with your personal and then
right. And then I had some from the PAMMs, but they weren't that long either. I mean, they were, but again, you want to have a consistent track record. And that's the trickiest part with this. And this is why I always advocate, like I want to mention it because I want people to do it. If this is where you want to be, this is what you need to do. Right. So like I tell people 3 months is the minimum, but 6 months is ideal, and a year or longer is actually even better. And it kind of helps you actually stick to your discipline and your plan because you want to keep that track record, right? You don't want to put in 6 months of a track record that you've kept, 2-3% drawdown, and then one day you go to 30 and it's like your whole thing's ruined, right? So it actually helps you with accountability of your plan and your record, because then it's like time wasted or time lost.
No, definitely. And what would a profit split wise, or would you say these funds go about it when you're managing, say, 7 figures? What does that look like? The
higher you get, the smaller the cut. I will say that people should appreciate prop firms because we've gotten a little spoiled with it. Because before prop firms, that was not very realistic. When you're trading other people's capitals, you're usually making 30% or less. And the higher the amount, you're making 5-10%, right? Obviously, we're not like financial advisors or financial consultants where it's like 1 or 2% of like multi-millions. That's different because we're really live trading that, day trading it with Forex, or at least that's what we do. But, investing is a little bit different. But yeah, the higher the capital, typically the smaller the profit split. So, but it does matter, obviously, once you get to like really high numbers. So obviously, like, when I'm only doing a few million, let's say the profit split is like 10 or 15, then that's still not technically more than if I was doing 6 figures on a prop firm and making, 75, 80. But once you get to 10 million plus, 20 million, 30 million, obviously that's not comparable. Then I'm making 6 figures on a withdrawal versus trading a 6-figure account.
How's that? What's that process like then? Do you withdraw at certain periods?
Right. So once you get to higher amounts, the other biggest change is quarterly withdrawals only. They're not going to be touching that capital moving around like that, like bi-weekly or monthly. So that's another big change that I had to do, where I was used to doing whenever I wanted on my account. Well, prop firms were originally monthly, but then it changed to bi-weekly. And obviously as it gets more competitive, it gets shorter. But at that point in time, it was monthly and then like bi-weekly sort of. And then I'm going to, PAMM accounts is usually monthly. It's typically at the end of each month. And then, funded accounts, once you get to a higher amount, typically like 10 mil plus, it's going to be quarterly.
That makes sense.
So 4 times a year is what you're getting paid.
Does that ever stress you out, or maybe in the beginning, did it stress you out or anything?
It was definitely a change, but the numbers are good, so you just got to be smart with the money. I've always been frugal with money, so if I was frugal on 30-something K, I can be just fine on
much
different.
And what about drawdown for those sort of accounts?
Very strict. 1.5% overall risk, period.
Across like max
yeah,
drawdown.
You're not ever going past that amount.
So how do you manage your risk then?
You got to keep it low. So I like to risk max 1%. So I have the leeway of, like, if there's issues that I still have 0.5 that I can, like slippage.
Do you mean 1.5 per day? Or
overall? So basically, I can do that on one position if I desire, or if I want to have multiple positions. I usually do about 0.25 or 0.5 per position. So that way I can have room to put other positions if I want. Of course, I can also stack. Once I have one secured, then my risk is open again, right? But yeah, I'm looking to just, I typically scalper intraday. I do swing, but I don't really do it on those accounts. I do more intraday with the larger funds just because of
So did you say you risk 1%?
Yeah, I prefer to do 1%, and that gives me leeway for any type of error or risk or just whichever.
Oh, do you mean 1.5% per trade?
No, I meant overall. Yeah, so basically, what I would, so when I was trading like 8 mil, my max risk would be like 80, 100K. So I just keep it low because I want to have that room once again. And I don't, like, once I started having to use tighter risk, I realized I didn't need as much as I thought. I can trade riskier on my personal account. When I started, I was doing, I think when I started trading, they told me 3 to 5%, which, you don't need that much. You're fine with 1 to 3, but of course it is nice to have the flexibility to do it if you desire. But nonetheless, 1.5% overall. So usually I'm risking about 0.5 or 0.25 per position.
No worries. And then what sort of pairs do you trade then?
Gold and US 30. And I know technically I'm not trading Forex. I be telling people that. I'm like, I know I trade in the Forex market, but technically I'm trading commodity and CFD. But those have just, once you've been trading for a period of time and you value liquidity and volatility, those are kind of
volatility
what I've gone to. Yeah. So, but I mean, when I traded just index pair, I don't know why I said that. Forex pairs, GU and GJ were my 2 mains.
Okay.
Yeah.
And how have you found, obviously, trading such a large capital? What issues have you sort of faced in terms of, people talk about slippages, people talk about having issues with actually having the transaction go through?
Yes. So you're definitely going to have, you have to be very picky about the brokers, right? I know I talk about that a lot on Twitter, but it's because it's very important. When you're talking big numbers, those little bit of differences are major, whether it's the spread, whether it's the fees, or the execution. So that's why I talk to people a lot about like LPs matter more to me than anything else, because liquidity providers are the ones that are going to be dealing with the execution on the trades and everything like that. So, a broker can have a tight spread, but if your LP isn't executing the trades, then what does it matter? They're not like, so that matters to me. LPs matter, how they're executing it on that trade, on that price matters to me almost more than anything else, because that's the difference of thousands of dollars when it comes to trading like that. I did learn when I traded higher capital that putting in large lot sizes is not, you can have a harder time with the fill on those. So I started learning to have to drop multiples to get better prices on execution.
Would you have to sort of like spread the entry?
Yes. So and a lot of institutions do trade that way, and that's why liquidity kind of feels that way because you need the opposite side of that transaction for it to play, right? So so if I do it all at one time, like, they technically do the same thing, but it's like this one may have a hard time executing properly and these might not. And so sometimes you actually just get better positions doing that way, you know, because you'll have slightly different risk reward. You know, if you have a zone and you're kind of stuck in that area, some of those entries actually end up being really good, you know, so.
Just because you keep
because some have better risk rewards than others. But obviously the highest one is still an appropriate risk reward. But sometimes it actually works in an advantage. And then so previously when I was doing the larger lots, I was doing partials at certain prices. But now when you're doing multiple positions, you can just take full and let others run.
Yeah, so it's a bit easier to manage in that sense. Do you have to do it manually, like each of these entries, or do you have like limits, or or do you use something software?
I tried Magic Keys for a period of time. I'm for whatever reason don't trust it for large capital. I don't know why. I'm just like so worried about it not working, and then I'm like, oh no. But I do it manually. I do a lot of it manually. I do use pinning orders, but I use them very intentionally. So let's say that I market executed some prices. If I think that'll be a lower price that I just might not get to, and it's like maybe the best risk reward, I might have a limit there. And then I also use stops for momentum trading. I only use stops for momentum trading. Yeah. So like basically if an expansion is going to happen here and, you know, and I'm very narrow on the TPs with my stop orders, right? Because I want it to be only where it's like through that zone.
It's straight.
So so the ones that I'm holding are the ones that are going to have some of the pullbacks. The limit ones are the longest target typically. But I use them all very intentionally and very differently. But a lot of my trades are mainly market execution. Yeah.
And this last one on sort of the funded rules, the fund account rules, if you will. Like, trading news, for example, is that frowned upon? Is it something that you
should we really talk about this?
Avoid?
Let's take a break for a minute there, guys, because I want to tell you about our other sponsor, TradeZella. Now, TradeZella is something I only wished I had during my journey, because I would have saved myself so much time and, more importantly, money, because TradeZella is the greatest automated journaling software on the market. That's right, automated. All you have to do is connect your MetaTrader 4, MetaTrader 5, so essentially your account, and it will pull up all of your data with all your statistics. It goes so in depth from obviously your losses, the days, the times. It allows you to bar replay so you can actually see that trade as if it was live. Absolutely incredible. It's an absolute game changer for everyone's trading journey. Without data, how can you make a statistical edge? I went through so much time without collecting data, without journaling. And why was that? Because most people find journaling very tedious, when in reality, why not have it automated and all done for you? All you do is just add the notes. As part of TradeZella, you also have playbooks. So if you have different entry drills, you can list them all out so you can categorize your trades. TradeZella is for everyone, whether you trade options, whether you trade Forex, whether you trade prop firms, or even just your own personal account. It is here to revolutionize the trading journey. Make sure you click the link in the description below and use the code RIZ10 for 10% off. Go take a look at the link in the description. Let's get back to the episode.
Okay, well, I'm one of the few that do trade it, and I do trade it well, but I still agree with the sentiment that a lot of people say about being cautious with it. I do obviously, like, the main thing I will say is always understand what you're in for. So I understand slippage. I understand, you know, stuff like that. So when I take that, I understand the possibility of that happening. So I'm not going to complain if slippage happens or the execution isn't proper. I understand that risk. So
would you reduce your risk? Because obviously you got that 1.5%.
Yes, you should reduce your risk. And then it's fine too. Like for me, a lot of times I just trade it on my personal. I did for a period of time trade it on prop, but you know, it's riskier on there because of the limits of and violation. So you got to do what works for you, what you're able to do. And that's the thing about all trading. It's all very personal, and people try to put blanket statements on this is what's best, but it's like that might be best for you. That might not be best for someone else. So always understand what works for you and how you can do it most efficiently. If you are going to do it, be smart with it. And that's my main thing is like, if your decision is, I'm just going to avoid this completely, 100% respect that. You're protecting your account and you're protecting your capital. That's great. If you know that you can capitalize on it well, and you're not going to be, well, the one thing I will say on it is this. If you do trade it, don't be extra greedy. This is where people mess up. Because it is so liquid, if you are in good profit and you have that thing secured or have a tight target, that's fine. Like, yes, a few times it'll run past and you're like, oh, I should have held it. I would have made such and such. Or it would have reversed and blown your account. It's like, I remember I had a mentor previously that told me that when they're like, when trades worked out really well, they're like, yeah, but think about the opposite as well. They're like, when you make a decision, you regret it. Sometimes you made a good decision. And just like sometimes when you made a bad decision and got lucky, you know what I mean? Like, you need to consider all that when you're trading. So, can you always make more? You're always going to miss some pips. It's inevitable. You need to have a good target, take your money, and be fine with that.
Yeah.
So,
in terms of like style of trading, what sort of style do you use?
Such a great question. I just like to say, generally speaking, that I like to capitalize on liquidity. So I do trade supply and demand zones a lot. I look at internal and external liquidity, meaning like if it's inside. So supply and demand is technically internal liquidity of sorts because it's basically a previous position being revisited and being traded a second time, right? Whereas external liquidity would be considered the areas outside of previous zones that are established, like points of interest. But I'm always looking for those areas, and that's where most of people are either exiting or entering, and then I just wait for what's going to happen and then take the trade. I don't say just wait. Like, obviously, I have a little plan, but it's hard to go over 6 years of that.
No, of course.
In detail. But generally speaking, the market is only going to reverse or continue. It's going to buy or sell. It's always only two choices. So.
Yeah, that's true. And do you have, if I'm not mistaken, from the little research that I tried to do beforehand,
right?
I think you have a high strike rate, right?
Yeah. So a lot of that has to do with my trading style. I'm fine with protecting my trade fairly quickly, but I listen to a lot of different traders that also don't do that. It's like, stop loss or TP or your hoe or whatever. I don't know. Maybe that's not the best word to use, but like, you're not going to stick with it. It's one or the other. But what I will say is I get out of a trade very intentionally. So what I mean by that is this. When I secure my trade, it's always a very specific time. It's not just like, it's not even amount of pips. Basically, I see that it's already checked that zone. It's already cleared it. So that's when I'm securing it. And typically, from what I've seen with the trades that I take, if they're expanding that liquidity, then I might continue, and I'll be good with that trade. I'm fine with getting taken out because I'll just get back in if it's giving me the same reaction. So that goes back again to customizing your trading strategy that works for you. If you're not able to be on the charts, then you're not going to want to do that because you won't be able to get back in. So again, your strategy is personal to your trading style. I'm usually actively trading, and I do it for 2 hours each day. Well, 2.5, basically from 8 to like 10:30 a.m. Eastern. So if my trade, I'm fine with, like, for example, if we have a zone that hits 3 times, I'm fine with taking that in 2 trades and then taking a third one, and that's the one that runs. I'm fine with that. For someone who isn't staying on the charts and they have that one position, they just hold it the whole time, and they make money on it one time, that's fine for them too. There's no right or wrong way. Again, it's what works for you and what you like to do. But I have no problem getting back in a trade, specifically if it gives me the same reaction. So if it takes me out and it validates it, then of course I'm not getting back in. That doesn't make sense.
So when it takes you out, do you mean break even?
I mean break even, or we'll pass stop loss as well. But if it takes me out, I usually do my break even slightly in profit to cover the commissions or whichever. So it's usually like a small win. But you'll be surprised, those really do add up. I noticed that when I was doing that previously. So I do want to explain with my win rate that it was never like I was hitting TP every single time. So that's where people got kind of like misunderstanding of thinking that like I'm hitting TPs like 90% of the time.
Yeah, okay.
And I want people to be realistic that, you know, win rates aren't always like that. And even when my win rate was higher, I wasn't like, this is the only way to do this and you have to do this to be a good trader. No matter your win rate, you just have to be able to accept what it is. So if your win rate is, I know I said before, but if your win rate is 50-50, then you got to realize that you're realistically going to lose 50% of the time. And as long as you're okay with that, then that's fine.
So you have to like actually accept the reality of
Yeah.
what the data
And your risk reward typically needs to be in line with your win rate. So if you have a really low risk reward, like say you're someone who does 30-40%, then you might need higher win rates. Or, I'm sorry, higher risk to reward so that your trades really compensate for that. If you have a higher win rate, then you can do 1 to 2, 1 to 3s because your losses aren't necessarily going to knock out your wins.
Of course, yeah. So what sort of risk to reward model do you use?
I don't have a set number. I just do 1 or 2 or higher.
Okay.
I know some people have a set, and that's what I mean. Some people like only take 1 or 2s, 1 or 3s.
Yeah.
So
you have like a minimum.
I don't have a set number. I just 1 or 2 or higher.
Yeah, that's fair.
Yeah.
That's fair. Mine's like 1 to 3 or higher.
Yeah, because it gives what it gives.
Yeah.
And anything less is just not worth it.
That's it.
For me personally. But
Exactly. Yeah. No, same. Yeah.
I also know a trader who trades 1-to-1 and she kicks butt and takes names,
Yeah.
but she has a good win rate, so she
That's
can.
it. Yeah. No, recently I've been speaking to a lot more traders who have a much lower risk to reward model that they're happy to take, but yet they do phenomenally well.
Yep.
And even though I've always known the fact that anyone can trade any way, it just reinforces it more, especially because of
Absolutely.
the narrative, like with SMC and just
Well, I
generally.
want that out.
Yeah, they
'Cause
like
it needs
1
to
to
be.
10, 1 to 20 and stuff. It's good to see the other side as well, and more people doing that as well, because I feel like that's probably the only way people start to sort of have an example. Oh, this guy does 1 to 2, or this girl does 1 to 2, which leads me actually onto the big question, which is, of course, being a female in such a male-dominated industry. As I mentioned to you before, I've had many requests to have a female trader on, and it's been hard to do.
Happy to hear.
Yeah, definitely. No, I appreciate it, and obviously, again, big props to you for the major travel, and then to jump on a pod straight away. It's not the easiest thing.
Appreciate it.
But I've noticed, especially since getting on Twitter, I think more than anywhere, is there's a lot more females in the industry, a lot more females trying to get into the industry, and I feel my understanding has always been, or my opinion has always been, that as slowly more and more getting involved, and more in people like yourself and very small handful of others that I know of anyway, who are mentoring or teaching or at least sharing value online, the more examples that people have, the better it is, if that makes
Absolutely.
sense. Right? Because like us guys, we've had examples for years and years and years, and some examples have been good, some examples have been bad, but they've been there. They've been guys, young guys, and doing some lifestyle that guys want, and because of that, there's an example. Yeah, exactly. Yeah, there's there's this example for years, and so it's so easy for the guys to be inspired, or to say, okay, oh look, that guy looks like me, right? Or that guy came from the city I'm from, or that guy had the same story as me, right? And therefore connection, bang, inspiration. Well, because of the lack of the female trader for a very long time, especially the female example trader, maybe it was much harder for them to get involved. Maybe it was much harder for them to see themselves doing it. So I don't know what your thoughts on that is.
I mean, it was the same for me. I definitely resonate with that. I feel like I was interested in trading or investing or financials before. I was always really good at math, but I never wanted to do the school route of like the 4-year and then banking and working my way up in the system. And I assumed it was really male dominated and just all those things that probably kept me from it. When I wanted to do it, I just didn't care at that point anymore, because like I said, I was fed up and ready to do something regardless of it. But I understand feeling like, oh, there's no one really doing this and I'll be outnumbered, but sometimes you just got to be that one. Because you got to look at the aspects, like obviously financials have come a long way in the US. People forget women weren't even allowed to have a bank account only so long ago. I mean, not like recent, but it's still, in the 1900s, right? So it's not like it was a crazy period of time ago. I keep hitting this thing. I'm so sorry.
Don't worry.
That, women really weren't involved in financials and finance anyway. So, it was the old boys club. But ultimately, we are good with money. So, well, that's obviously a blanket statement. But studies show that women are really good with trading because we're very systematic and we're good at we follow risk and we take the lessons a lot better, right? We're not trading as much sometimes out of ego or like what was it? There was this survey that I read one time about how men apply for jobs that they're underqualified for, and women tend to apply for things they're overqualified for. And so that little bit of difference, like confidence obviously does help in trading, and that helps men a lot. But because we're playing it safe a lot, that can help us in a place where we're playing it safe. So it's definitely a trade-off, and obviously these things are blanket in general, so it doesn't apply to every person. But generally speaking, we are good with risk, and we tend to follow our systems very well. And we're not going to take those same L's for 3 years before we change it, I've taught men before who were like, I've blown 20, 30 accounts, and it's like they're bragging, and it's like, I mean, I've had some large losses or losing streaks along the way, but I couldn't see myself doing like that many accounts and just, I don't know. I'm not changing my system. I don't know.
You have a better like emotional control.
Yeah,
and,
we tend to,
as you said about being maybe more the risk tolerance as a more of a focus.
Right.
And main thing you mentioned there, which is the ego. I mean, it's a big difference.
We all have it for sure. So we're not going to be able to skip that. And I don't even think, to be honest, ego is fully a problem. It's just just like everything, you just want to have it under control. So you just don't want it, because I have heard. Well, actually, I've read, Ryan Holiday's book, Ego's the Enemy, and I do read a lot about psychology and things like that. I think it has its purpose, just like all things. But you don't want it to have you being reckless, and then you're not changing your strategy. You're going to have a very long, miserable trading career.
That's it, yeah. That's very true. And what challenges have you faced, if any, being a female in the trading space, especially as transitioning into sort of funds, actual funds?
Right. Well, I've definitely had men that have wanted to take advantage of the fact that, you want to be in the industry, you need to do these things for me and whatnot. I try to advantage power plays, and I just don't entertain it. Unfortunately, I have seen other women that have, and that's their decision. For me personally, that's actually what I love about trading, is that it's a numbers game, and the market doesn't care about who you are. The world might and people might. The market is a numbers-based, results-driven system. So to me, the market doesn't care that I'm a female. I show up and I trade, and I have numbers. So regardless of whatever anybody thinks about me, my numbers reflect, who I am, or at least in trading. So,
yeah, that's great.
So I've always loved that about trading. So, sometimes even men who maybe previously might have not wanted to work with women have been like, well, dang, she's like the best, kind of like need to give it a chance, kind of. So I do feel like sometimes maybe I obsessed or overcompensated, like in my setting and everything that I did, because I felt like I was representing a lot of women. So I did put a lot of pressure on me that I technically put on myself. But I also like to be the best in general. So I guess a lot of that was that too. But yeah, I've definitely faced some of the adversity of people trying to leverage their position, or being like, if you want to do well in this, trying to leverage power play, but I just don't entertain it.
No.
And I feel I'm fine with like leaving a place if I'm not appreciated, because ultimately I know that I perform. So, I'm not going to sit here and do extra or beg. Like, it's just not my style. I wasn't raised like that. So
I think the best thing you said there for sure was in regards to the market. The market has no bias. The market doesn't care who you are.
No bias whatsoever.
It doesn't care where you're from. It doesn't care about your problems. It doesn't care about your, how good you are either.
It applies to all things.
I guess it cares how good you are.
Well, it cares to hear about your trading, but
that's it. But it doesn't judge you. It doesn't judge you, and
Right.
I love that. It's really incredible, because obviously not in many other industries, unfortunately, it doesn't work the same.
Right.
Like those people in the power plays have a lot of power, and they might control. They might literally be able to close the door while trading. Yeah, that door may close over there, but there's because of the sort of freedom, if you will, and the independence that trading brings, you can take
absolutely.
it in your hands.
I mean, like the people or the industry may be this way, but the market itself is not.
Yes.
So that kind of goes back to what I was saying before. All I ever needed was opportunity, right? I don't need people to cheer me on or support. I mean, it's great, sure, but ultimately all I've ever needed was opportunity, and I'm just going to take advantage of it.
Definitely. I love that. And we're going to take it a little bit back now in regards to getting started in trading, as you mentioned, you had a job, a second job, and then did you say you were studying as well at the time?
Yeah, I was in school for a BS in nutrition. So the only schooling that I actually finished was my associates in culinary. In my younger 20s, I went to school and left, I think, 3 times.
Oh, wow.
But I was in school at the time for BS in nutrition, which I still have, like, a passion for food and cooking and those things. But I feel more what I'm doing now is my purpose.
Yeah.
Yeah, I ended up leaving that to do trading.
How did you manage those things, though? Because a lot of people struggle with.
I don't even know.
A lot of people, that's the main struggle, right?
It was hard. I'm not even about to like sugarcoat it. I was only getting 2 to 3 hours of sleep a night. My side stuff was like lifting Uber and then like babysitting here and there, but yeah, it was rough. There's no way around it. But see, the thing is that when I was learning trading, I knew it was my solution for that problem. So even though, basically when I did it was after I put my daughter to bed, I always did it immediately. Because I'm like, if I don't do it now, it's not going to happen. And of course I'm tired, and of course I could have put it off. But it's like, but this is also a solution to that. And so I just had to continue to remember that while I was doing it. Because it's like, the thing about the multiple jobs that I learned in time is that when you're doing an actual job where you're exchanging your time or your effort, you run out of that. I don't have any more time. I have to sleep, and I can't give more effort. I'm gonna pass out and just be in the hospital. So that's when I was like, once you learn that you can make money off of money or have money work for you, I'm like, this is the solution. So I just have to grit it out for this period of time, and then that helped me stay focused, I guess.
Yeah. So having that deep-rooted why,
and
then staying consistent.
Yeah. And
so,
staying consistent.
How did becoming a mother change you in a way? Was there? I guess that's the question. I guess.
Yeah. I mean, it definitely drove me like nothing else. I was always motivated and pushed myself. Generally speaking, I've always been competitive. I did sports growing up, a lot of different sports. So I've always been competitive, but I just wanted the best for her, and for myself as well, of course. But also, for my family before me. I guess I really haven't spoken about that much, but my father is Cuban. My mom's from like a small town in North Carolina, but I'm first gen, so I was born here, but my father is actually from Havana, Cuba. So they came over when he was 11, I think, on freedom flights. But, they always told me how they grew up and the things they struggled with and all that. And so my parents worked very hard, full time, both of them. My dad did HVAC, and my mom did property management. But I learned to cook because I would cook dinner for them, before they'd be home from work, because they're working all day. And so I saw them work every day, all the time. And then even then they still made time for us. But it's just but I saw all that struggle. So I know all they did for us, but I wanted to have that time and be able to do all that. So I kind of wanted to give back to my family as well. And just all those things combined, they taught me my work ethic, but now I also want to work smart and kind of put those together, because people don't know what they don't know, right? So I'm thankful for what they instilled with me in terms of working hard and being consistent and all those things. But now I'm going to apply that, not necessarily in a job, but I'm going to treat it like a job until it becomes, a replacement for all the rest.
Definitely. And what were their thoughts of trading when you first started getting into it?
They loved that. The sarcasm. Yeah, definitely the part when I left school to do it. That was their favorite. They definitely were skeptical. Would be an understatement. Especially since, remember, I was in the MLM first. So it was like, oh, God, she's in a cult. It's borderline possibly. But, I think they supported me the best way they could. They obviously wanted me to finish school, but they've also saw me go and leave before. To be clear also, even when it comes to schooling, I've always been pro-education, but not pro-schooling, if that makes sense. So I've always been eager to learn, and so that helped me with this, but I've never liked the schooling system and kind of how it is. You know, I feel like the smartest people don't like schooling. Not the smartest, but the brightest or most ambitious may not like schooling because they're always trying to contain you, and you are actually limiting the possibilities of what you can do. So for me, it wasn't hard for me. It was actually easy for me. But when I wasn't doing well, it's because I didn't want to. I wasn't applying myself. So that's what I tried it multiple times to appease, what my family wanted. But ultimately, I'm the one who's paying for it, and I'm the one who has to show up. And it's just something had to give. So, yeah. So they weren't crazy about it. But in time, they saw how consistent I was with it and how my journey progressed. And, I think they're thankful that I was able to have the time freedom that I was able to. My mother did pass about a year and a half ago. And if I wasn't doing trading, there's no way I would have been able to take her to her appointments, help pay for all that stuff, all those things that if I had had a regular job at that time, I would have had all that time missed. Either that or I would have had to quit my job. Definitely. There would have been no way. So even though I hadn't been able to, thank you. Even though I hadn't been able to, I wanted obviously to be able to pay for everything and her just be better, but it was just too far along. Sorry, that's what I was getting to. My end goal was to retire my parents. I know a lot of people have that goal. I wasn't able to do that for her, obviously, before she had passed. But I'm still thankful for that time and everything, and that I was able to help with all of that. So,
did that have any impact on your trading during that period?
I was actually thinking about this just recently. I actually performed really well when she was sick, but I think it was only because it was my safe haven. And because I had it was actually my break from everything else. But I think it actually affects me more after the fact. So during it, and this period of time was quick, right? Because from diagnosed to passing was 3 months. So I think a lot of that was again, it was my routine and it kept me sane. So I was able to perform then, but it was kind of like autopilot. I don't know if anybody's dealt with someone sick, but you're kind of on autopilot. So it wasn't until after the fact that I did need to deal with it more. I was a little bit more anxious. Not typically that way, but after she passed, I was definitely more anxious, just kind of her not being there and dealing obviously with sadness and potentially some anger. So I actually had to deal with it more after the fact. And so I had a harder time with my losing streaks, if I had any losing streaks then, because I just wasn't in that same mental space I was before.
Definitely.
So I had to take time to deal with my mental health. 100%. And I feel like that needs to be talked about more in trading. Because if you're doing it long term, you're going to have stints in there where you're going to have times where you need to address your mental health.
Well, what do those moments look like for you? How have you gone about addressing it?
Right. So, whether it's therapy, I do have a trading hypnotherapist. I was also trying to deal with some things on a really deep level, right? Because obviously when you're doing, meditation or therapy or things of your own work, you're working with things that you're conscious about. But I wanted to try a hypnotherapist because I wanted to do things that I was dealing with, I feel on a subconscious level. And so, she's been great. She's really helped me a lot with some of my anxious tendencies that I was developing in my trading. I make better decisions.
There you go. And did you find that as you progressed in your journey, especially as you're starting to hit bigger milestones, larger capital, that you had to be a bit, even more insightful, even more on the ball, rather than I would imagine the sort of the usual mindset is that the better I get or the more successful I get, the easier it gets. If that makes sense.
Yeah, that's such a good point. Yeah, I've had to become more disciplined and self-aware. I'd say for trading, that's one of the top traits that I've seen in successful traders is that they're very self-aware. Because the accountability level that you have to have as a trader, whether it's your funds or someone else's, but especially for trading other people's funds, is on a whole nother level. And so I think I had made a post about it before, but I was talking about radical accountability. I don't care what it is. That's the best way to practice it outside of trading and then bring it into trading is just take radical accountability for everything. But yeah, practicing self-awareness is something that is the way that you're going to continue to grow, especially at those levels. You get too comfortable, complacent, you can go back to traits that you've already feel like you've gotten past. And that is another good point to make anyways, is that people think, I've gotten past this, now it's good forever. It's just wait, creep back over here. So, habits that you've worked on, it doesn't mean that they can never come back or that you're not ever going to regress. So that's why you have to continue to do the work. And that's also like in your journaling or in your track record, what you're paying attention to. Okay, I used to be really good with this. Am I getting poor or sloppy with this? And really just analyzing that and working on it.
Definitely. And what's your goal from here? Because obviously you're working with a lot of funds.
Yes.
And you've got large capital. But like, what's the, not end goal, but like, what's the future looking like?
Well, I am actually considering getting back to personal funds only, just 100%. Now that I've done, all different type of risk parameters, I kind of like the freedom of your own trading, that you can really just do whatever you want. Obviously, you want to stick to your system that helps you be profitable. But being able to have the flexibility of really all of it, from your withdrawals to, profits, 100%, besides fees, of course. I really feel like just going back to trading my own capital again. I'm still meditating on it. But yeah, that's where I'm at right now.
Yeah, no, that's fair enough. And as you say, like the end of the day, we get into trading for the freedom. And though there are opportunities and good opportunities around, the end of the day, the ultimate freedom is obviously everything that you can control.
Absolutely.
And we're coming towards the end of the podcast, so I'd like to do quick fire questions.
Sure.
Right?
Let's go for it.
And there's one that's reoccurring that I ask every guest, which is, if you could meet anyone, dead or alive, rich or famous or not, and just to spend time with and learn from, or just spend time with,
oh
who
man,
would
I
it
should
be?
be ready for this. God, I feel like this is so random, but Maya Angelou.
Maya Angelou, yeah.
Yeah. I love the way she carries herself, and I think she's such an interesting character. And since I wasn't prepared for that question, even though I knew you asked it, that's the one off the top of my head. I just have a lot of respect for her. And, I don't know. I feel like she's the ultimate sensei or something. She's very bright.
Well, like I said, like there's no right or wrong answer.
Yeah.
And that's what I like about the question, because it's like you get different perspectives,
Yeah.
And randomly you might get a very random answer, but
I mean, there's people in the trading world, but I would just actually go and meet them. Like, obviously, I do study many great traders, but if they're still alive, I'm gonna make the point to meet them.
Exactly. Well, that's
just like I just met Lance recently. Like, if I have the opportunity, like I always say, all I need is the opportunity. I'm gonna make it work.
Someone said to me, ask her to help you get Lance on the podcast. Like, I don't know Lance or come across Lance before, but yeah, Lance
is great. He's very bright, very sharp, and I can definitely see why he was the top performer.
100%.
Where he was at.
Well, this is what I was going to ask you. Actually, that was my next question. Was that
good.
you travel, and you attend summits,
yes.
Summits. I feel like might be not the wrong word, but like you attend like conventions,
trading events, events, conventions,
around
networking.
the world. That's why you're here right now in Dubai.
Exactly. So
what's the mindset with that?
Yeah. So basically, I feel that it's needed to be able to expand your network and to meet people. But now that I've traded at higher levels, I understand that not everybody's on social media, not everybody's trying to teach, not everybody's trying to,
have their name out there.
So if I want to meet another best, I need to go to these places where they might be, whether it's a market maker, whether it's a firm, a broker, liquidity provider, whichever. If I really want to be in this world and know all these things, then I need to be exposed to it and meet these people and learn. So obviously we are in an internet age where you can learn a lot online and you don't have to do that, but I actually like the possibilities of doing that. And some of the people that I've met by doing it, I would have never met online.
How many doors have opened because of that?
Majority of the most recent opportunities, like the largest opportunities, have all been from that.
Incredible.
Especially referrals, like by word of mouth.
And how hard is it for you to make those decisions to sort of go to these events, for example,
Right. For me, it's an easy, quick one, but I've always, I feel like investing on yourself has the best ROI, right? So I just look at it as like, I guess paying it forward or whichever, like I'm just gonna, it's an investment and it's gonna pay off. And I just love to learn and be around like-minded people. Well, not just like-minded, but like people that I look up to.
Yeah. People who understand the mindset.
Right.
Because the interesting thing, the reason I asked you that is because I've the main thing that people say is I'm so lonely in trading. I don't know any traders. No one I know trades. They don't understand me. But yeah, and then there's all these events. And yeah, don't get me wrong. This is in Dubai. This is so far away from you. So I understand why people might feel, oh no. But there's people where there's an event right next to them, and they won't go because they won't take action, or they're too reluctant.
Because they care what people think.
Yeah.
People already want to be established before they're scared to show up. They look up to somebody and they're like, I don't want to show up till I'm there. But how are you going to get there without being exposed to that person? The one thing I will say that I did from the jump that I respect from people who do this is ask questions, stop caring what people think. When I started trading and I was in that group and I was brand new, I was asking the most experienced person, that's who I'm talking to, People are too scared about, well, what do they think if I don't know this? Well, you don't know until you ask. Like, God forbid they judge you, whatever. Like, what happens? You get upset about it for 5 minutes, move on. Like, to me, what mattered more was getting the information and learning. So sometimes you just gotta get uncomfortable. That's where growth is.
Definitely. And, we'll finish up with this last question then, which is, what would be your advice to people out there? You've done a really great journey in terms of starting with your personal, doing the PAMM accounts, doing the funded accounts, and then obviously managing fund accounts at 7 to 8 figure level. And so you've experienced a lot, and you throughout that journey, you've probably seen a lot, experienced a lot, and done it all essentially.
Absolutely.
So what would be your advice to people out there? I'm going to give you another question after this very quickly,
Sure.
but what would be your advice to people out there who want to just excel, like just to push forward, whether it's towards managing other people's capital, personal capital, but essentially get to that full-time and consistent stage?
Well, try to have a plan the best you can. The plan doesn't have to go 100% to, what you set, because sometimes, different opportunities or things will happen. But mine started with a simple plan. It started with, I'm going to compound, just scaling. So part of the networking is learning what you need to do that. I didn't even know how to get into the other stuff, right? The PAMM was just by luck and by opportunity. But by going to these events, that's where you learn the process as well. It's like, okay, and those are the questions that I'm asking, right? We just talked about asking questions. Let's say I hadn't been in a fund yet and I wanted to do that. Go to places that have it. What do I need to do? So again, people are too worried about those people laughing at them, but you don't even need everybody to believe in you. You just need one person. You only need one foot in the door. Maybe I did sales long enough to understand that you get 10 no's before you get one yes, and I don't really care. I don't take them personally, because trading is the same way. Maybe that affects me in the trading as well, where you get a lot of no's, stop losses, and maybe one yes. But yeah, you need to figure out a plan, whatever works for your journey, and stick to it best you can. And as you do it, continue to ask questions along the way and continue improving that process.
Definitely. And the final...
No, I was just saying the opportunities aren't there if you're not looking for them.
Yeah, exactly. That's true. Yeah. That's true. And the final question then is just for the female traders out there, or the females who are looking at the trading industry, might be put off by what they see due to the lack of example or lack of maybe feeling that they will not fit in. What would be your advice to them?
Create different if you want different. Be the change, be the example. If you want to do that, then just do it. I think a lot of times we look at the obstacles more than the opportunities, right? So if this is what it is, that means there's opportunity all around it if there's nothing else like that. So although I don't technically have a desire yet to do all female firm or anything like that, if someone wants to and that's your passion project, then do it. But I think looking at limitations gives you problems and no solutions, right? So be what you need.
I love that. And well, thank you again.
Thank you for having me.
I really enjoyed it, and hopefully we can do it again sometime. Maybe if I'm in the States, or I know that you need to visit Europe, right? So maybe that'll be the excuse. But everyone, thank you for tuning in once again. Make sure you drop in the comments below your biggest takeaway from this episode, and links to Alyse's profiles will be in the description below. And as always, make sure you like, comment, subscribe as well. We're on the road. I don't know when this is going to come out, so we're probably, I'm going to say past 50,000 by now. I'm going to say maybe even past 75,000. But thank you everyone for your support, and until next time, take care.